Welcome back, welcome home. Hope you're having an excellent, wonderful day. We're here with one of the best in the business. New York, Connecticut, New Jersey. Stay tuned. It's your favorite mortgage broker from Canyon Mortgage, Ms. Sheriffa Parkinson. Ms. Sheriffa, please introduce yourself. Tell us about what you got going on.
Thank you, Justin. As Justin mentioned, my name is Sheriffa Parkinson. I'm a loan officer here with Canyon Mortgage for the past, 8 years. Prior to that, I was a financial service specialist for another 10 years. So I've been in the industry for over 15 to 20 years, right? I am not a banker, I'm a broker, which means that I'm able to facilitate my clients to get the deals that other banks can't get done. We have an array of lenders that we work with. Every situation is different from every client, so we make sure that we have lenders that will fit specific situations, right?
Ooh, so what you need, Sheriffa's gonna help you get. Ooh, that's what I like to hear.
Yeah,
okay.
Definitely.
So we're here talking today. You're gonna tell us about this whole pre-approval business. There's a lot of questions that folks always have. Buying their first home, selling and buying a home, condo, co-op. We just wanna get an overview of what it takes to make sure you're qualified to purchase a home.
Okay, good. So initially, this is not for first-time home buyers. This is for everyone who's thinking of buying a second home, investment. The same principle applies, right? So the first thing that I would focus on is my finances. And that can be broken down into 3 different categories. Let's say savings, income, and credit. So on the savings side, we're focusing on your down payment and your closing costs. Now, there are different programs that you're able to get grants on to facilitate the down payment option and closing cost option. But let's just say we're not focused on that for right now. We're just going to do the mere minimum of what you need for your down payment. So for minimum FHA is 3.5% down. So you have that saved aside. Conventional could be 3%, but that's also income restricted.
And that's for single families only, or what is that for?
For single family,
okay,
yeah.
gotcha.
And then there is the closing cost, which is typically between 3% to about 5% of your purchase price. You might ask, but how do I know my purchase price is, right? So what you'll do is that if you plan to buy a property, I will start scoping out the areas to see exactly where I want to buy and then have a better idea of what the prices are going for. So I would say between, let's say 8% in total that will cover your down payment and your closing costs. So let's move on to the income. Now, for the income, there are different aspects that we use to qualify you. We look on your W-2s, your pay stubs. We look on your commission, overtime. If you're getting child support, for example, we'll consider that. Now, with the child support, we have to see that you have an agreement in place and the money is in fact going in your accounts on a monthly basis for at least 3 months. For the commission and overtime, we want to see you get it consistently for the past 2 years. Some lenders will take 12 months, but some need it to be at least 2 years. We want to see that you have a 2-year job history working. It doesn't have to be the same job, but we want to see that there's no gaps in the past 2 years of employment. So child support, alimony, we can use alimony. If you are self-employed, we will also look into that as well. Check your Schedule C for the past 2 years. If you get income from your, let's say, rental property, look on your Schedule E as well, and we use that to help with the income, right? Just speak to your lender and then we see exactly where you are and we adjust figures to, fit your pre-approval process. The next will be your credit score. Now, your credit score is dependent on what program you're going on. So let's say for FHA, your minimum score is 500, and that is if you're putting 10% down. Yeah. At 10% down. Some lenders will take that. And that's why I said brokers are always better, right? So if you're doing 3.5% down, then it's 580 minimum. And with your conventional financing, it's about 620. Of course, these are minimum credit score required. Doesn't mean that you have to go there. The higher you are, the better it will be for you to get your better interest rates. All right, this is just the mere minimum we qualified for. Questions on that?
No, it sounds great so far.
So far, okay. So once you cover all those bases, then I would advise to go and speak to your realtor or your lender to get yourself pre-approved. If you go to the realtor and say, listen, I can't show your property until you have a pre-approval. So anyway, they will recommend a lender to you. Or you can go directly to a lender, myself right here, and then we will go through the different documentation that we need for the pre-approval. What are those documentation? We mentioned income before. So we'll ask you for your pay stubs, last 2 pay stubs. We ask you for your W-2s for the past year to verify that you worked for at least 2 years, that 2-year history that we mentioned before. If you're self-employed, we want to see the tax return for the past 2 years as well. Some lenders will take 1-year tax return. If you've been self-employed for 5 years and over, we'll focus on just 1 year tax return. On your W-2s for the past 2 years, we look on your 2 recent pay stubs, your ID, and then we ask you for permission to pull your credit. So we have to make sure that we know what your score is, and we need to see those bank statements so that we can verify that you have that money that we mentioned before towards your down payment and your closing costs. One thing I have to mention about the bank statement, I see happen so many times. If you are a Caribbean national like myself, we do a lot of susu. Not saying you can't put the susu in the account, right? But we have to make sure the money is seasoned in the account. So let's say you're planning to buy a property in the next 3 months. Take that susu money, put it in the account prior to you start even looking, so it can be seasoned in there. Do not put that susu money in the account when you sign a contract, because we can't verify it. Any large deposits over 1% of the loan amount, we cannot verify if it's going to be cash. So just speak to your lender before you dump any excessive amounts of cash in the account, all right? That's very important, because if we can't verify the cash, we're going to have to back it out of your transaction.
Gotcha. Now, question though. So if I have money, let's say in a retirement account, and I'm using this towards my purchase, and I know that usually the retirement accounts want to contract the sale before they let me pull out the funds.
Right.
Is that what we're talking about, or is that something separate?
Well, that's something separate, because with that, we can verify that. Once we can verify the retirement, we'll have a statement to show that the money's in the account. We show a bank statement, show the money going into the account from the retirement. We'll ask for a statement after the money is pulled from the retirement, so we can see the track record of where the money is coming from. Those are verifiable sources, so that's fine.
Gotcha. But if Mama Jefferson was holding all the funds and then
under your mattress and then you just dump it in the account and we can't verify it, then that's where the issue is going to come in. I want to go back a little bit on the closing costs, because there are ways that we can try to cut your closing costs a little bit.
Tell us more.
Yeah. So for one, we can adjust the number with your application, because we charge an application fee. So if you want to talk to your lender about trying to waive that, that could be something that we could try to, make adjustments on. The next thing is, which is a big thing now that people are trying to tap into, is the SEMA purchase. So with the SEMA purchase, and I want to mention here that the SEMA is not a program, it's not a loan option, it is an agreement. So how does a SEMA work?
So before we go into that, what does SEMA stand for?
So SEMA stands for Consolidation, Extension, and Modification Agreement, right? It's like, you don't have to worry about that all. So it's an agreement between, on the purchase side, between the seller and the buyer. So on that purchase aspect of it, the buyer will have to get permission from the seller before they can consider doing a SEMA. The seller will have to make sure that their lender is able to facilitate the SEMA as well. And the buyer have to also make sure that their lender is able to facilitate the SEMA as well. So there's a whole kind of, intertwined together. Everyone has to be on the same page. So now let's say they're all on the same page. What the seller will do is that they will assign their mortgage amount, whatever the balance is, they will assign it to the buyer. Not assume it, assign it. So when you assume a mortgage, you're taking the terms of the mortgage, you're taking the interest rates as well. We're not assuming anything, we're assigning just the amount over to the buyer. What that does is that the buyer will not pay the mortgage recording tax on that portion. They're only going to pay the tax on the difference. So if the property is selling for, let's say, $850, the seller owes $500, the buyer will only be paying the difference between that the 850 and the 500. That's the only thing that we see.
So they'll be only paying the mortgage recording tax on the 350, the difference.
The difference, because they'll put down payment down as well. So when that is taken out, let's say they put 300,000 down. So it'll be the 300,000 that we're paying the tax on. Big saving in that aspect. So what would be the benefit of the buyer doing this? One, the big saving, of course, which we mentioned before. The percentage of the tax is 1.8 to about 2.17%. That's a big percentage, right?
That's the biggest single cost in the closing cost as a buyer.
So if you're able to minimize that portion, then that could save you a whole lot of money on your closing costs.
Thousands of dollars.
Right? Why would the seller not do this? The seller might not do this because the FEMA takes a while to get done, up to about 6 months. So if they're trying to get a quick sale, then that might not be the option for them. And then they also save on the transfer tax, but the bulk of the saving is on the buyer side.
Gotcha. And when a savings does come up through a SEMA, also sellers, just be mindful, you may be able to negotiate with the buyer to get some of those savings on that the buyer gets on the mortgage recording tax. You can split it. So it's different things where it could really benefit both parties and the bank. So if everyone got the time to do it, hey, let's take advantage of it.
Right. And then initially when we give our closing cost number to our buyers, we give an estimate. And the reason why we give an estimate because we haven't pulled title yet. We haven't know what the fees are going to be. So certain things cannot be changed, right? For the title, for example, the fees for the title, there's fixed amount of cost that we have to pay for that. Amount to be escrowed, that's not going to be changed for the property taxes and insurance. So the only thing that we can try to maneuver and change a little bit would be like asking about the application fee I mentioned before, trying to apply for a SEMA if the seller is willing to facilitate that with your attorney, try to negotiate on the cost that they're willing to charge you on that. Speak with your realtor, see if you have to pay your realtor. Because not all of the realtors charge. So that's also something that you have to speak to your realtor beforehand. Am I paying you or is the seller paying you? What kind of, situation is happening here? So you know where you stand initially. Because when we give you that 4.5% of the closing cost, we're not factoring in the realtor costs. Okay, it's not in there. So you have to talk to the realtor about that. So if all of this is perfectly ironed out in terms of the pre-approval process, you need to go ahead now and work with your realtor to find a property. One thing I need to mention as well is that when we give pre-approvals, it's not based on your net income. It's based on your gross, which means we're not factoring in your utility payment or what you pay for childcare. Like, you know this. So if we give you a list and you're qualified to pay $5,000 a month, you know within yourself, I can't afford $5,000. But we're giving you the maximum pre-approval possible, and then you need to decide what makes sense for you and your family at the moment. So get a realtor who's on the same page with you. Write down your needs and wants. It's easier for you to get that down. Check the area as well that you're planning to buy in, because that will help my friend like Justin here to find properties for you on a much faster scale than when you have you have no idea where you want to live and you're all over the place. It's easier to narrow it down where you want to go, check the areas, check the schooling, the neighborhoods. So what makes sense for you? Check that out. Drive there in the night, for example, and check out the neighborhood. You know what I'm saying? Like, try these things, and then you see what makes sense. And speak to the realtor, say, okay, this is the neighborhood I want, this is the area. Let's try to go in that direction. Gotcha.
So once we've given you all the paperwork, we've gotten our pre-approval, we're out there looking, how should we be communicating with you as a buyer or even as a realtor as we're going through the process of looking for a home for someone?
Okay, good. So initially when we give a pre-approval, it is based on a certain property tax bracket. So if it is that you find a property that's outside of the pre-approval scope, let's say the taxes are lower or higher, but the price is lower. So you have to reach out to me at that point and say, listen, I found a property, it's not within my scope, however, the taxes are much lower than what you put on here. What am I looking on for payment, and do I qualify for this? So at that point, I will revise your pre-approval and check on numbers and just say, okay, you're good to go or you're not good to go. Both, the realtors can ask me or the client can ask me. It doesn't really matter. At least we're on the same page where that is concerned.
Okay, gotcha. And is that the same with I'm trying to think of things. HOA fees, flood insurance, I don't know, whatever else, other fees that might be attached. Solar panel leases. I'm seeing those all the time now.
Yeah, that is good.
Honestly.
So with the solar, if you're buying a property that has a solar panel on there, we need to see the agreement and to check to see if the agreement can be transferable, right? If it's not transferable, then chances are seller might have to pay off whatever it is that they have on the solar agreement. I have a situation right now with a client, so then I have to just pay it off to move on. But once it's transferable, now that's going to be a part of your payment. So make sure you check to see if the property has a solar panel, check on the agreement that's in place with that. Check the area to see if it's a flood area, because that's not calculated in your pre-approval initially, unless you said I'm buying in this specific area. Then the realtor will know, the loans will know, okay, fine, this is a flood zone, so I have to put that in, right? So if you go outside of that scope, you have to let us know. And one thing, guys, don't lie to us, because you're gonna find out. I've done so many deals before, and I find out that people are lying for simple things that they know we're gonna find out about. Can I talk a story real quick?
Please go ahead, tell us, let us know.
A story real quick, right? So I had a client who, I mean, they're older people, so you have to be very patient with older people, right? I understand that. But when I got the approval on the file, I realized that there were two properties that came up on the approval. One property was the property that they had years ago, which they sold, which is fine. The other property that they had, apparently, they were also in the process of buying another property for their granddaughter. So they're into a process of buying two properties at the same time. I said, but you can't do that. She's like, well, I don't need to know that. That's not my business. I don't need to know. She's like, I don't need to know that. That's not your business. I'm like, I definitely need to know that, ma'am. Things like that. If I asked you, have you had a foreclosure in the past 3 years? And you said, no, I have not. Because sometimes it doesn't show in your credit report. And said, no, I have not. We're going to find out, because when you run our fraud search, and we'll see when your social is linked to any properties, we're going to know. And then you could potentially kill the deal right then. Whereas if you were honest and upfront with us from before, we'll tell you, okay, this can't work. Let's try to consider doing a co-signer. Let's try to restructure a different way. So you have to be honest with us at the get-go when you're doing the pre-approval, so we can structure and guide you in the right direction.
Ooh, that's you heard all them gems? Hold on, let's keep going. We've consulted with you throughout the process. We've gotten pre-approved. We got the house, accepted offer, inspection was fine. We're going into contract. What kind of happens for us after that? Because I feel like people know the term pre-approval, that kind of, we understand that a little bit, but then afterwards, when we actually got a house selected, we don't know what we need to do.
Okay, that's good. Before we go into that step, let us just backtrack a little bit with the inspection. So a lot of clients believe that when the inspector goes there and said that these are stuff that needs to be addressed, that the inspector are specialists in these areas. The inspector are just trained generalists that will go there and say, listen, based on the code, this needs to be addressed, that needs to be addressed. They're not licensed contractors, they're not licensed roofers, they're not licensed electrician, you understand? So when they give you a recommendation, it's best that you get these specialists to go and check on these things, because I see where people are saying, but the inspector didn't see this or didn't tell me it's going to happen. The inspector is not a specialist. So, and when you do an inspection, it doesn't mean that the deal is dead at the moment or that there's an issue with the property per se. Some stuff are cosmetics that needs to get done. You know, you can literally move in the house and fix them, you know, over the years. You have to know if this is the right house for you, and if you can manage these little minor things that need to get addressed over the time. Don't overbear yourself with this when you see that list. You're gonna see the list. There's no way you can do the inspection and there's nothing. It's gonna be like, oh, the proper house is completely clean and perfect. Then they have not done their job, you know? So don't get frightened and disarmed when you see the inspection report. They're just giving you a general idea of what they think needs to be addressed, all right? So let's say the inspection is perfectly fine. Oh,
one thing though, now that you brought it up, when it comes to the inspection, folks, and you get that report, please share it with your real estate agent, because we need to review it as well. And you're the one who paid for it, so a lot of inspectors only send it to you, as they should. But please share it with us or instruct your inspector to do so. Sometimes, and Sheriffa can tell us more, there are items that should be addressed that come up from the inspection that can affect your actual financing.
That's true.
Tell us
Let
about
me
that
elaborate on that
Yes,
for a
ma'am.
second. So if you're doing a federal loan, let's say FHA or VA, they're very strict on certain things that they need to be in compliance with the property. One of which would be a handrail. You have to make sure the handrail is going up on the stairs on both sides. They don't want to see any cracks in the foundation or on the steps. They don't want to see any loose tiles on the ground or in the ceiling. So they are very strict with these little guidelines that you have to address. So some things you can't, when you get from the inspection report, speak to your realtor and your attorney to see if the things can be addressed prior to closing. Because what's going to happen is when the appraiser goes there, right? When the appraiser goes there and these things aren't addressed, he's going to say, okay, the property is worth XYZ. However, these things need to be addressed for it to be FHA compliant. And then they'll have to go back there a second time to verify that these things are taken care of, which you have to pay for again.
Ooh.
You don't want to pay for that second trip, right? So make sure that when a report comes out, you speak to your realtor and your attorney and see if we can have all these things addressed before you schedule for the appraiser to get out there.
Excellent. Ooh, gems. All right, so now contract. What's going on?
Okay, so you now are excited. This house is yours. You finally get it. You go to the your attorney and sign a contract for your down payment down, and then that's when the work starts for us. Now, everything that we did in the initial pre-approval, we're gonna have to verify that this still stands. So we'll ask you for updated documents, updated pay stubs, updated bank statements, and we're praying to God that you did not dump cash in the account. So we verify these things, and then when we get these documents, we will submit this to the underwriter. Now, the underwriter is the one that makes the decision, typically. Not really us as loan officers. We have to, they're seeing this in black and white. We know you on a more personal basis. So we have to present your case in a way for it to make sense to the underwriter. So the underwriter might approve the file, and then they will say, okay, the file is approved with these conditions that needs to be outlined before you close. One condition might be they need to verify that you're working. They will say that they need to get the appraisal to get done to verify the value of the property. They want to see the down payment check coming out of your account. They want to see they have enough money to close. So they will look on whatever you presented, and then they will say, okay, we need additional documentation to close the deal. Title report is also important. So when the title report is pulled by your attorney is the one that get that requested. So when the title report comes back, we have to verify that there's no judgments, verify that there's no anything that is alarming the property that needs to be addressed, violation of the property. These things we have to look through. So if title comes back clear, no issue. Let's see, appraisal comes back with no issue, and you have sent all documentation in that we asked for in a timely manner, then once the appraiser gets the underwriter gets everything in, then we will give you that clear to close, which is what everyone is asking for at the end of the day. We need to see that clear to close. And let me just mention this to you. Not because you're signing contract means that the house belongs to you. And that means that do not go out there and buy a furniture. I'm gonna buy my bedroom set. I'm gonna buy my couch. Never you buy anything until you get that key in your hand. Because what's gonna happen that we do a soft pull to verify that the credit remains the same. And the day before or even the day off, we check to verify that you're still working at your current job. So don't leave your job. Please do not leave your job in the whole process of it. And if you do plan to leave your job, speak to your lender first before you just make that decision, because that's going to affect the entire process. So you get that clear to close, and then the attorneys are going to coordinate and let us know when the closing is going to be, when everyone is on board, and then you're going to reach out to your attorney, to your realtor, and let them know, okay, we're closing on XYZ day, and then you do that final walkthrough. That walkthrough is done the day before closing, sometimes the day of closing, depending on the time that you're closing. When you do that walkthrough, you're trying to find out that nothing has changed since the last time you saw the property. Check everything. I mean, I tell my clients, open up the cupboards, look inside there to see if anything is leaking. If anything is different from when you initially saw the property, take picture or videos of it, and then take that to your attorney at the closing table. And they might do some, negotiation at the table to try and get back some credit towards whatever else that is, that changed since the last time you seen it.
Excellent, excellent.
For your closing day, make sure they walk with your ID. I tell my clients, just don't even think of going to work that day because you're going to be at the closing for a while signing those documents.
Okay.
This is when you ask your final questions. This is where you talk to your attorney, because once you get those keys and you walk through the door, the house is yours. Everything belongs to you. Everything that comes with the house belongs to you.
Mm-hmm.
So you have to make sure that you ask the questions, the proper questions, be it closing on time. Everyone that is on the mortgage has to be present on the at the closing table. And there's one thing I didn't mention when I mentioned about the credit score. I want to just address real quick.
Of course.
So if you are using a co-signer on your deal, we're going to use the credit score of the lower of the two, the middle score of the lower of the two. So let's say your score is a 750 middle score and the co-signer is a 620 middle score. We're going to qualify the loan on the 620. So make sure that your co-signer has the same score as you or higher, nothing below, because that's going to affect you with the interest rate as well. Okay, so put that in before close off.
Okay, great point. Sheriffa, thank you. Amazing. Is there anything else you want to add?
No, I think I pretty much went through the steps one by one, and I just want to let you know that if you reach out to me, my number is 929-343-0646. Email is sheriffa@canyonmtgcorp.com. Even if you have a question, I'm available, right? It doesn't have to be that you want to get a deal done right away, right? If you need me to walk you through the process again, I'm available. If you want me to get a second opinion on what you're doing, I'm also available. All right.
And what about refinances?
Refinances too. I'm here for you. We do refinances, purchases. We do investment properties, DSCR. So if you are an investor and you don't have any income to show, it doesn't mean you cannot buy a property, right? What we'll do for the DSCR deal is that we use the rental income of the property to qualify you for the deal. You just want to make sure that the payment for the rental is the same or more than the mortgage payment, right? And that's what we use. It's a bigger down payment process, but in your investors, you have the cash, right? So it's between 10 to 20% down. Credit score has to be at least a 640 and over on these programs. If you are self-employed and you don't want to show your tax return, we offer profit and loss statements programs. We have bank statements programs that we look onto to the average of the past 12 months or 24 months to qualify you. If you have a 1099 employee, we will do the 1099 to qualify you as well. Forget about the tax return. There's a 1099 only to qualify you. We have that. So there are so many different programs available for you out there. When you go to a lender and say, no, you're not qualified, don't think that this is it. Just go around, shop around, and see if there is hope. There's always hope, right? So shop around with different lenders, all right?
All right. Yo, Sheriffa Parkinson giving us great information. Her contact is down in the comments and descriptions below. Also, if you need anything, selling, buying, reach out. We're always happy to help.
Thank you, guys.
Have a great day.